Morning, good afternoon, good evening, wherever you're watching me today. My name is Peter. Welcome back to Invest with Peter. So today I'm going to be talking about, the PPI report that came out last week. I'm going to be talking about Chinese, reopening that's going to affect the way we on the market react. And I'll be talking about, the CPI report that will be coming out this week as well. So if you are interested in what I've just listed now, please, just wait till the end of this video and you're going to get all the information that you need to invest this week. So if you're seeing me for the first time, my name is Peter Ads. I bring this valuable information that helps me and I believe it's going to help somebody, every week. Once a week, I bring out all this information. And if you've not subscribed, please kindly subscribe to the channel. And very much. Put your comment down below. Ask me any question about investing in cryptocurrency, stock market, Forex, what have you. Whatever you want to ask me about investing, just ask me. I'll be there to answer your questions. So today, this week is going to be the last, CPI report that's going to be coming out this year, 2022. We know that 2022 has been a very difficult year for investors and for everyone around the world. Since 2020, after COVID-19 came the invasion, and 2023 has been projected for a very deep recession. Hopefully we have a mild recession, right? But it's not been easy for people who have been investing in the stock market, and those who have not been investing, it's not been, if you ask them how much they buy their fuel, how much they are paying for the gas and electricity, how much people are buying stuff in the market, everybody can tell you one or two things, and one or two reasons why 2022 has been a very, very challenging year for everyone. But now we have the last, CPI report for this year, which is going to be coming on 14th of this month. That's, this week where we're in. So the FOMC guard, they're going to have their meeting and they're going to be talking about, the rates. They're going to be raising rates, 50 basis points, 75. Some people are saying 75 basis points, but I still think it's going to be 50 basis points. So let's go straight to the point. Our PPI report. The PPI report came out last week, Friday. And, that's the if you're a young investor or if you're a new investor, PPI means, producer price index, So it came out and it dropped from 8.1% that we had in October to 7.4% this month, now November. So October had 8.1%, but it dropped a little bit in November to 7.4%. So, and people were saying, well, it's not that good. That's still higher than what the market is expecting, but still things are still coming down from month to month, not year to year. Year to year is actually increasing, but by month to month is actually decreasing. So the food price surged by 3.3% in November. Food, the core CPI, yeah. We have PPI and we have the core PPI. So the core PPI actually includes of volatile, that's the food price, the amounts or the price we pay for food, the price we pay for gas, and the supply margin category. So it actually rose from 4.9%, if I can remember vividly, 4.9% till November a year ago, but actually drops to 5 points. It dropped from 5.4% October. Yeah. So that's what I'm saying now. So October actually came down from 5.4% to 4.9%, if you get what I'm saying. So month by month is actually dropping, but year by year is actually too high, for the market. So that's that. It's a bit tricky and it's a bit unstable for Fed to determine what they're going to do. But I think the Fed has actually made up their mind that they're going to be increasing the rate. And most people believe it's going to still be 50 basis points. I still think it's going to be 50 basis points, right? So what people are saying 75, but it's going to be 50 basis points. And they're going to be, I think the market expects 50 basis points now, then 50 basis points by February, and 50 basis points by March. That actually, it's actually projected data. So if anything changes, it might increase to 75. But at this point, market still believes it's going to be 50 this month, 50 February, 50 March. So energy crisis has been all over the place, and people have been saying, okay, the price of Brent is down, the price of crude oil is down, but still, the market is still wondering what's going on with the price. Now, let's move on from PPI to what's, the G20 are actually, doing with this oil price. They're trying to regulate the oil price, and they're actually saying, well, the way we need to cap they said the way they want to go about the oil price is by capping the price of oil that actually comes from Russia, because Russia is actually still benefiting from the price of the oil that they said, because guess what? Countries are still buying Russian oil. So by proxy though, they're not buying straight away from Russia. They're buying from Russia's, middlemen like China and some other countries. So India still buy, Russian oil. UK still buy Russian oil. If you're hearing it for the first time now, UK still buy Russian oil. And so Europe and Germany still buy Russian oil, but they're not buying straight away from Russia. They're buying from middlemen like China. So China is going to buy the oil from Russia, and Russia and China will sell to the Western countries and, to other countries that want to buy, or they are projected, or they are buyers, So they are like middlemen that actually do business with Russia and the West. So indirectly, whatever they are telling you on the mainstream media, Western countries are still buying Russian oil. So some people knows that, but not everybody knows that. That's what I'm saying. So now they're trying to cap the price, right? So that they're not going to be putting money in front of Putin. So if you get what I'm saying now, so they're now trying to cap the oil price. So the oil price they're trying to do now, they say that they want the price of a barrel to be like $60 a barrel. And Russia was like, nah, that's not going to be happening. So Putin last week actually had a conference meeting where he was speaking about, the nuclear weapon is God, that he's not a madman, but he's still using his nuclear as a means of deterrent, not like he's going to be the one to use it for just trying to use it as a backbone, as something to defend himself if anybody tried to invade or cause chaos in his country and all that. So he now spoke briefly about this oil. He said, well, if the West actually want to cap his own oil, then it's going to reduce the production rate. So that means the millions of barrels they're producing every day is going to drop off. So once it's drop off, it's going to cause the supply chain to be the supply chain to drop. So the drop, that means demand still going to be high, and the remaining barrels of oil would West have no choice than to buy it for exorbitant price. So that's the way it's trying to counter what the West is doing. So that's why you see on Friday that the price of oil was all over the place, up now, down, was going up and down, because there's no market don't actually know where it's going to put the price of oil. So that's why it was all over the place. If you check the Brent, WTI and all that, they were all over the place on Friday last week. So what I'm saying now is expect the price of fuel to go down. It's actually low from, US from $5 to like 3.25 cents, and in United Kingdom it's like £1 50 something, 58, £1 64 diesel, and for petroleum it's like £1 40 something. So it's just thereabout. It's been dropping from year high. But what we're actually looking at is that in the coming year, we expect the price of fuel to go back up again, because Russia is still going to cause a supply chain drop off, and which is going to affect the price of oil again. So that's what they're actually doing about that. But I still believe the market is still projecting that the oil is still a good sector to invest, because people have been investing in oil. But I invest in oil as well. I have DVN, I have Chevron in my portfolio, but I just think like there's still a bit of places where we need to be very careful with oil. So because it can just drop off or maybe rise. So be careful with that. As a matter of fact, I will probably sell my, oil stocks and, energy stocks rather. I'll sell my energy stocks, take profit, because I don't know what's going to happen in 2023. So from there now, let's go to the market rally that everybody's expecting. If FOMC have their meeting this week, not if, they're going to have their meeting this week. When they raise rate, if they raise rate by 50 or 25 basis points, market is still going to rally towards Christmas period. So I still expect the market rally, and I think it's still going to be a good time for us, to take profit if you want to take profit, because this is not the time to be investing. If I were you, I'm not going to be buying at this point. I'll probably be taking profit, because everybody's project 2023 to be a recession year. From there, we're going to see what happens to the market. The CPI, yes, let's talk about the CPI coming out. I am projecting the CPI to still be around 7 point something percent. We are still not down to 6% yet. I think we're still going to have If we're lucky, we're probably going to have a high 6%, maybe 6.9 or 6.8. But I am still projecting 7.1% CPI. So, which is quite, still low, but it may not be as low as the market wants. Market is looking at 6 point something percent, but I don't think we're going to have around 6.7 or 6.5% yet, because price of goods, price of commodities, and price of groceries, people still pay high price for the goods and all that stuff. So expect the CPI to be around lower 7% to high 6%, and which is going to put markets on a bull, or not a bull, on a green run, because we're not in a bull market yet. So it's going to put market on a green run for the year end, and by next year we're going to see what's going to happen. Maybe the CPI number, the data that the Feds are going to be looking at before they're going to be increasing rate by February and all that stuff. But I still believe we're going to have a bit of rally towards the end of the year. I will be taking profit. I'm not your financial advisor. I'm just telling you what I'm going to be doing. If you want to be investing, or if you want to actually buy some stock, I'll actually advise you to wait until the new year before you start buying, because there's still a bit of downtrend that still need to be closed. I mean, the downtrend gaps that still need to be filled before we start going up on the chart. So, all right, guys. So concerning the Chinese, reopening, and if you've seen what's been happening in China, and where people protesting, and Xi Jinping don't even know what to do at this point. So they are actually, relaxing the restrictions and all that stuff. So that is actually giving us a sign that factories are going to be opening up again, and that's a caveat if we're looking at another bull run. So China is going to be the determinant or for the next bull run, because even if we're talking about recession in the United States, recession in Europe and all that stuff, if China is able to open back its economy, I think it's gonna, even if we're gonna have a recession, it's gonna be a mild one, because factories are gonna be open up, and most of the production that comes from China is gonna fill in the gaps, and the supply chain problem is gonna be it's gonna be relieved, and we're gonna have another boom economic situation where people can actually supply goods, buy goods, and actually do all this. So I expect market to start rallying on this news. Chinese stocks have been rallying on the news, but I expect once China open up fully, though it's going to be at the expense of their citizens, because so many people are going to catch COVID, and unfortunately some people will die as a result of that. But China has realized they need to open up their economy at this point if they don't want people to start revolting and start seeing 1 billion people on the street, which is going to actually destroy China empire and all that stuff. And if China go down, expect the whole world to go down, because the economy of their second biggest economy in the world, and most of the stuff we use in the office, everywhere you go, Chinese made product all over the place. If that actually cut off, I don't see any economy functioning without Chinese economy. So I believe once China open up fully, the bull run is going to be lodged in, and maybe not locked in, but lodged in, and we might probably see a mild recession. Then market will start rallying from there. 2023, we can't write 2023 off yet. If China, I say it again, if China open up fully, we might try, or we might narrowly avoid recession. And if we narrowly avoid a recession, then 2023 will probably be a good year for everyone who are investing in the stock market or cryptocurrency. But I still believe China has the momentum at this point. If they can do what they are promising to do, expect another bull run in the stock market. Thank you very much. Well, that's it for today, guys. I will see you in the next one. I remain Peter Ads. If you've liked this, if you like the information I give, please subscribe to the channel, put your comment down below, and I will see you next week. Bye for now.